outlook for large cap Australian equities in the second half of this year, I'd couch as moderately positive. And the reasoning behind that is I think we're going to have quite a good upcoming results season, which will give you the full year 21 earnings numbers, and then have positive outlook statements on the back of that. The reasoning for that, sort of positive view is that we're seeing really good trends in sales as the economy reopens. And on the cost front, we're seeing a lot of the COVID costs that came in. They're not, they are being replaced, but they're not coming back in at the full rate that they were taken out. So that allows some margin expansion as management teams have learned how to run their businesses better. Now, where they are coming back in sales and marketing, that tends to drive extra revenue growth. So again, that's good for the business. Certainly, there are some new costs that are coming back. Supply chain is still a bit troubled. Hard and soft commodities have gone up in price. But where we are seeing those things come back in, we are seeing pricing power from those types of companies that are having those cost increases coming back in, and they're offsetting those costs. So, we're pretty constructive on the outlook for earnings in the second half that we're about to report, and for the rest of the year. And then we're still in this area of very low interest rates. So there is a question of where do investors put their money to get a reasonable yield and some growth. So, we're constructive on the second half. So we've talked about, where our outlook for the earnings season looks good, but there are always puts and takes in marketplaces. And, our biggest concern looking forward is interest rate expectations that are flowing through from a lot of rhetoric in the market about inflation expectations. So, we're seeing inflation come through, as I mentioned, in supply chains, and various parts of the economy. But we're still thinking at this stage that they're quite transitory. They're related to COVID situations. We're not seeing wage pressures. So again, not a structural increase in inflation. But having said that, when some of those inflation numbers come through, occasionally a bit higher than expected, we will get interest rate forecasters predicting, bonds to sell off. And when bonds sell off, equity market valuations, which are quite full, will naturally decline a bit. So, that's sort of the area we're concerned about at the moment. Some examples of things we're finding good value in ALS. Now, ALS is a testing company, so it tests everything from minerals and resources to food to healthcare products to soil samples for infrastructure projects. So we think they're coming to quite a sweet spot as resource companies spend a reasonable amount on CapEx. And, with the environmental issues we have today, testing of foods and testing of healthcare products, etc., are becoming more and more to the fore. So that's a growth opportunity as well. So we really like that stock at present. We just had a meeting with them the other day, which confirmed our convictions on that stock. Elsewhere, we've been topping up Fisher & Paykel Health. It's a stock that did very well at the start of the COVID pandemic. It's a company that provides, respiratory equipment and consumables into the healthcare and hospital space. So they did very well at the start of the pandemic. And then when the market looked for reopeners, we had sold down a bit of that. We're now looking to top that back up again because, these hospitals have bought a lot of equipment, and we think they're going to move that out of just the pure respiratory area and emergency into the broader wards to use that equipment, and the consumables, which have reasonable margins attached to them, will be very beneficial for profits in the long term. At the moment, obviously the profits are going to go down post-COVID, and we see that weakness as a chance to increase our position in that company. We're also adding, to Qantas. We think that's one where, when the economy opens up again, they're going to be in a much stronger position than they even were going into the pandemic. Their competition is trying to reorganise itself. Qantas sort of owns the upper end and lower tier of the market. And then in the mid tier of the market, Qantas has taken out a lot of costs, so they're going to be ultra competitive in that space. So, we see Qantas going quite a degree higher over the next few years as its industry position and profitability increases.